Hello, good evening, traders. If you can hear me loud and clear, please type a yes or drop an emoji, a fire emoji in the comment section. Are we there? All right, thank you. Thank you, Annette. Thank you, Zebai. Thank you, Omavere. All right, any other person? All right, thank you, Ekong Udo. All right, so I think we should just get started. Others will join us along the way. Yeah, thank you, Ayodeji Dowu, Vivian Chinonye, pardon me. Okay, so let's get started. All right, so today is Sunday, the 18th of August, 2024, and we're having our boot camp. Thank you, Kate Uche. My name is Roti Malawale. I'm the head of training education for PU Prime Africa Lagos office right here in Nigeria. And I want to welcome you specially to this session of this boot camp. It's a 6 weeks event, and we're starting, this week today. All right, so today we're going to be looking at technical indicators, introduction to technical indicators. Now, when trading Forex or generally financial markets, you need technical indicators to know direction of where the market will go. There are tools that are already prepared on the trading platform to show us, what is happening in the market, either the market is buying or selling, whether the market's, how to make entries and take trades. You need indicators to do all that. So we'll start. So we say that technical indicators are heuristic or pattern-based signals produced by the price, volume, and or open interest of a security or contract used by traders who follow technical analysis. And by analyzing historical data, technical analysts use indicators to predict future price movement. Now, that's a catch here. So that's a catch here. They are used to predict future price movement. They are used to predict future price movement. So if they can be used to predict future price movement, then that tells you that they are very, very important, to our trading this market. Technical indicators. We have the trend indicators, trend, volume, momentum. So trend indicators. One, the first on the list of trend indicator are the indicators we call the moving averages. And we say that moving averages are lagging technical indicators which are used to identify ongoing trend. Please take note of those keywords. They are used to identify ongoing trend. That means if a trend is bullish, then you can use the moving average indicators to identify it. The trend is already moving bullish, so it will just show you that this particular trend is already moving, price is already moving in the bullish direction. And the most popular average periods the most popular moving average periods, are the period 10, 20, 50, 100, 200 moving averages. And moving averages can be simple moving average, that's SMA, exponential moving average, which is EMA, and weighted moving averages. Now, when the price move above the moving average, then the ongoing trend is considered to be an uptrend. Whereas when the price move below the moving average, then the ongoing trend is considered to be downtrend. We'll still look at the practical side of this. So let's just, hang on in the training. So this is a diagram showing the moving average. We can see the 200 moving average, the 50 moving average, and the 100 moving average. And we said for this moving average, when the price Okay, Kate is saying, what do you say technical indicators are? We already mentioned that they are used to determine, to predict future direction of price. Indicators are used to predict the future direction of price. I'm responding to Kate Uche. So there are tools on the platform used to predict the future direction of price. And now we're looking at the first one, which is the moving average. And we say that this moving average has periods 10, 20, 50, 100, 200. And the next slide I'm showing you now is the diagram showing some of the moving averages. And we said the rule around these moving averages are when the price is above the moving average, it means the market is buying, is bullish. And when the price is below the moving average, it means the market is going in the bearish direction. So this is a diagram showing us this. We can see here the 200 moving average, the 50 moving average, 100 moving average, and we can clearly see that price is below all of this, which indicates that the trend is in the bearish direction. That's just the simple thing we've been trying to say. When price is below it, it means it's bearish. When price is above it, it means the market is bullish. Now, another moving average, another type of trend indicators we want to look at is the super trend. Now, we say that the super trend, as the name suggests, is a trend indicator, and indicates that the direction of the price movement in the market is trending. Now, when you hear the word trend indicator, trend in forex trading simply means direction. If you hear the word the trend is your friend, it means the direction of the market. You're always trading in the line of the underlying direction of the market. So super trend indicator also helps us to identify the direction of price movement in the market. So we say a super trend indicator is plotted either above or below the closing price. The indicator changes color based on the change in the direction of the trend. If the super trend indicator moves below the closing price, then the indicator turns green and gives a buy signal. And if a super trend closes above, then the indicator shows a sell signal in red. And here is a picture showing us what we're saying about the super trend indicator. And this is what we're saying. The trend, you can see the red line. As long as price is below that red line, it means the market is trending downwards. And at some other point later on, price reversed from being below the red line and it crossed, from red to blue, and it means market is in an uptrend. So you can see the red line is indicating a downtrend, while the the blue line is indicating, a bullish trend, an uptrend. Next is a parabolic SAR. The parabolic SAR. Now, the parabolic SAR is another famous trend indicator that highlights the direction in which a security is moving. On a chart, the indicator looks like a series of dots that are placed either above or below the price bars. A dot below the price indicates a bullish signal, and a dot above the price shows that the bears are in control and that the momentum may remain downward. When the dots reverse, then it indicates that the potential change in price direction is going to take place as shown below. So this is what the parabolic SAR, this is what it looks like. So you can see here that we can see the dots. You can see the dots there. When the dot is above the price, you can see the market is trending downwards. This is a downtrend. And when the dot crosses, from above to below, it indicates an uptrend. So that's the parabolic SAR. We still look at all this practically. Then we have the Bollinger Band. We have the Bollinger Band. That's the next. That the Bollinger Band is a volatility indicator which considers three bands. Three bands in which the first and third band is +2 and -2 standard deviation, and the middle band is the 20 days simple moving average. When the volatility in the stock increases, then the bands expand. And when the volatility in the stock reduces, the bands contract. So this is an example, showing us the Bollinger Bands. You can see price bouncing from side to side right here. And the next label here shows that price is tightening and contrasting. And finally, we can see price is falling down the lower band. So here we can see that price has moved, it has crossed a bearish direction on this second label here. And from there, we can see price going in the downtrend. So this is a Bollinger Band. Next, we have the average directional index, ADX. The average directional index is one of the technical indicators that is used by traders for determining the trend's strength. Take note of that. Now, ADX is used to determine strength. It may not really show you direction, but it's a trending indicator that is used to determine the strength of the trend, whether the market is really, really trending or maybe it's ranging. The trend can be up or down, which is shown by two indicators. The negative directional indicator, that's the negative DI, and the positive directional indicator, that's the positive DI. Thus, the ADX indicator consists of three separate lines. This indicator helps the traders to analyze if a trade should be taken long or short or should be avoided. And this is the ADX. You can see it here. This is the line. You can see the ADX line here. You can see the 25. That's a line in blue, this region here. Usually, trades are taken if the ADX crosses above the 25 line. So other indicators can be used to determine direction, while this one is used to determine the strength of the trend. The strength of the trend, that is what this indicator is used to identify. When the price, is when the ADX is below 25, many times the market is seen to be ranging. The trend will not be too clear when the ADX is below 25, but when the ADX breaks out above 25, the market is volatile enough to pick a trade. Please, as you join this class, kindly mute your device so that we don't get distracted. Next, we have the momentum indicators. I would say momentum indicators help the traders to understand the speed at which the price of particular stocks changes. These indicators help us in understanding the strength of price movement. Sometimes the market prices fall fast, but at other times they might fall slow. We can analyze the speed of the fall or rise in the particular market by using the momentum indicators. All right, I'll take that again. We say momentum indicators can help the traders to understand the speed at which the price of particular stock changes. Sometimes these indicators help us in understanding the strength of price movement. Sometimes the market prices fall fast, but at other times they might fall slow. We can analyze the speed of the fall or rise in the particular market by using the momentum indicators. Momentum indicators are widely used technical indicators which measure the rate at which the price of a specific market fluctuates. They also complement other indicators like volume and volatility well. Traders should remember these indicators are more useful when the market is rising rather than falling. And that should be noted about momentum indicators. So types of momentum indicators, one, we have the moving average. Now, this can be called moving average convergence or divergence. Some call it MACD, or you can just take it raw as MACD, whichever one that you feel you're comfortable with. But the general name is a moving average convergence and divergence indicator. Now, MACD is a momentum indicator which shows the relationship between the two moving averages, that is 26 EMA and 12 EMA. It consists of the MACD line and the signal line. The MACD is the difference between the 26 EMA and 12 EMA and the signal line is the 9 EMA. The buying signal is generated by MACD when the MACD line crosses the signal line from below, and the selling signal is generated when the MACD line crosses the signal line from above. This is what we're saying. This is the MACD. We have the 26 line, the 12 line, and the 9. So what we're saying is that whenever the line crosses, the 9 line crosses from below to above, it indicates a buy signal. And when it crosses from above to below, it indicates a sell signal. That is a simple way to use, the MACD. When the histogram crosses from below to above, it indicates a buy. You can see that in this diagram right here. When it crosses here from below to above, it's a buy. And here, you can see a crossover in this instance here, and it crosses from above to below. That is a sell. Next, we have the stochastic oscillator. The stochastic oscillator. This momentum indicator is used by traders for comparing the current closing price of a stock over a particular period of time. It tracks the momentum as well as the speed of the market and does not consider volume and price. Stochastic help in identifying the overbought and oversold zones and oscillates in the range of 0 and 100. When this indicator is above 80, then it is considered to be an overbought zone. And when it is below 20, then it is considered to be an oversold zone. This is what we're saying here. This is the stochastic oscillator. Now, this indicator, like we said, is bound between 0 right here and 100. The 80 zone is said to be the overbought zone, and the 20 is said to be the oversold. So when anytime price gets to 80 zone and above, price is expected to decline. And when the RSI, when the stochastic crosses from the 20 zone and below, price is expected to move in the bullish direction. We'll still look at all this practically on the chart, but this is just, the initial theoretical part of this, class tonight. Next, we look at the relative strength index. The relative strength index, the shortened form is the RSI. The relative strength index is another popular momentum indicator that acts as a metric for changes in the prices as well as the speed at which they change for a particular period. The indicator oscillates between 0 and 100. Signals can be spotted by traders when they look for divergences and when the indicator crosses over the center line, which is 50. When RSI crosses above 50 signal, it signals positive and uptrend momentum. Though if the RSI hits 70 and above, then it is an indication of overbought conditions. On the other hand, RSI reasons that cross below 50 show negative and downtrend momentum. If RSI is below 30, though, it indicates oversold conditions. Now, this is the RSI, and this is what we're saying with the RSI. The 70 zone, you can see the red line there, that's the 70 zone. The blue line there is the 30 zone. The 50 is not indicated here, but it's somewhere around here. So when RSI rather gets to 70 and above, that is an overbought zone. And at that zone, we expect a decline in price. If you check on the chart, you will see that there's a decline. Here, price is very close to 70, and we can see the chart, declining. Here also is at 70. We can see a slight decline around this zone here. And the 30 zone is the oversold zone. 30 and below is oversold, meaning when price gets there to the 30 and below, we expect, a bullish movement in price, once price gets to the oversold region on the RSI. However, on the 50 region, when price crosses above the 50, it indicates a buy. And when price crosses below the 50, it indicates a sell. So 70 with RSI is overbought, 30 is oversold. When price crosses from below 50 to above 50, it's a buy signal. And when price crosses from above 50 to below 50, it's a sell signal. We've looked at the ADX. Okay, so we look at the volume-based indicators. I would say that volume plays an important role in technical analysis that helps in confirming trends and patterns. It also indicates how many markets were bought and sold in the market at a given period. This helps us in gauging how other traders are perceiving the market. One of the main benefits of volume is that it leads to price movement of the market. That is, giving us early signals when the price movement is going to continue or reverse. Hence, volume indicators are useful measures for a trader. The first one we look at under volume is accumulation and distribution. And we say the accumulation distribution line is a volume indicator which measures the cumulative flow of money into and out of a market. A high positive multiplier with high volume indicates strong buying pressure, which pushes the indicator higher. On the other hand, a low negative number with high volume indicates strong selling pressure, which pushes the indicator lower. This indicator tries to detect positive or negative divergences in price. So this is a volume, indicator. That's the accumulation distribution. You can see here there is a bearish divergence. You can see the diagram there, and you can see the price, trending downwards. Then we have the unbalanced volume. Unbalanced volume is a volume indicator that calculates the buying and selling pressures as cumulative indicator, which sums up volume on up days and subtracts volume on down days. Kate, just relax a little. We'll get to the screen very soon. We'll do the practical side. Just give us a little time. Let's run through this session. All right. So when the stock closes higher than the previous close, then all of the day's volume is considered up volume. Similarly, when the stock closes lower than the previous close, then all of the day's volume is considered down volume. Rather than the value, one should focus on its direction. So when it comes to volume, just rather than the value, focus on the direction. And here we have, the on volume. As you can see, price is trending up. You can see the arrow showing that price is trending higher as the OBV here is rising higher also. The money flow index. The money flow index. Now, money flow index is a movement as well as volume indicator which analyzes both time as well as the price for measuring the trading pressure, buying or selling. It is also known as volume weighted relative strength index, as it also includes volume, unlike RSI, which only incorporates price. And that's just the formula. I don't want to bore you with all that. I think at this point, let's just go straight to the screen. Somebody's saying she's not getting it. Don't worry. We'll flip over now to MetaTrader, and I'll show you some of these indicators, how to get them attached on your chart and how to use them. So I'm going to be flipping now to my MetaTrader desktop. All right, so I'm on MetaTrader now. I believe you can see my screen. If you can't see my screen, just type, the comment section, and we'll look at that. All right, so this is the MetaTrader 4, which we're using tonight. And what we're doing tonight is I want to show you some of these indicators that has been mentioned so far. That is the ones I believe you will be using more often, as a trader. So we mentioned quite a number of indicators tonight. I'll show you some of them, and we'll move on from there. So this class is actually a practical class. So if you want to install an indicator on your screen, you come to the indicator menu. You can see that place I'm circling up there. I think I need to be sure you can see this. If you can see my MetaTrader platform, my MetaTrader screen, please type a yes or drop a fire emoji. Let me be sure we're still together. Can you see? All right, thank you, me. Any other person, Ekong, Macaulay, Kate. Yes, I know Kate too. I want to say I want to say a response from you to be sure that I are flowing. All right, so let's write on. Thank you, Manfred Okon. Let's go on. So to attack this indicator, you come to the indicator section up here where I just circled with the blue line. Then you click it, and you can see now. Ignore the first set of indicators you're seeing. What we need is the is a menu that takes us to the drop down. That's where we actually need. All right, so I'll click on it again. Now, we want to first look at the trend indicators. Now, like we said earlier, the essence, the trend shows us direction. That is what they do. They just show the direction of the market. We may not be able to know the level of volatility or how far the market will go, but all we know is that either the market is going to buy or sell. That's what we know with trend indicators. And we've looked at the moving average. And this is a moving average right here. You can see it's the first item on the list. If I click on the moving average here, you can see this menu is going to appear, and the first is a period. Now, we said that for the moving average, there are many periods, but the ones that are usually used is the 10, 20, 50, 100, 200. 5 also can be used, but then let's just start with 10. That should just suffice for now. Now, for this class tonight, I just want to show us the 200 moving average, which is one of the biggest of the moving averages. So you can see the period is 200. Now leave the shift, leave it as it is at 0. Don't touch it. Now, under the MA method, there are about 4 types of moving averages there. You have the simple moving average, the exponential, the smoothed, the linear weighted. Now, there's another class in Saron where we can look more in details about these types of MA method. But for the sake of tonight's class, I personally prefer to use the exponential moving average. So I'll select the exponential, leave it as apply to close, and under style, you can pick any color of your choice. The color is your choice, but I prefer tonight to use red to indicate the 200 moving average. So I'll click OK, and you can see the moving average line has been added to the screen. That's the line you can see that is running through the chart. So what we said earlier is that when price moves from below to above the moving average, it indicates a buying pressure. It indicates a bullish movement, as you can see right there. Let me do it again. Price crossed from below to above the line, and you can see the market is buying. Again, another instance here, price crossed from below to above, and you can see the market is buying. So let's scroll back. Let's do more back test and see that. Now, in this instance here, price crossed from above the line to below the line, and you can see the market is selling. Again, from below to above, you can see the market buying. Again, in this zone here, from above, price crossed below the moving average line, and you can see the market is selling. So that's just basically how to use a moving average. When price is above it, it indicates a buy. When price is below it, it indicates a sell. So it's purely an indicator used to determine direction. All right, I'll close it now, and I'll attach another moving average. And the second one that I'll attach is the parabolic SAR. Remember, we mentioned the parabolic SAR. So I'll click on the parabolic SAR, and you can see here, just this one, just leave it, don't change any setting. Step 0.02, maximum 0.2, style line. You can always put any color of your choice when it comes to colors. Colors doesn't affect the setting in any way. So I'll click OK. All right, I'm having a white background, so the green is not showing. So let me use a darker color for that. So maybe I should use something like a dark blue. Okay, even that is not showing, so I can make it bigger. So I'll come to the lines and select a bigger line. All right, perfect. Now here you can see for the parabolic SAR, the meaning of SAR is stop and reverse. Stop and reverse. That's the meaning. So what happens is that when the dot, stops, and reverses from up to down, it indicates the market is in an uptrend. You can see here when the dot is below the price, it indicates a bullish movement. And when the dot is above, you can see when dot is below price, it indicates a bullish movement. But when the dot is above the price, it indicates a bearish movement. It indicates a selling pressure. When the dot is above the price, it indicates the market is selling. That's all the simple way to use the parabolic SAR. You can see here, the dot is below the price and the market is trending up. It's below and the market is trending up. And here, the dot is above and the market is trending down. So when the dot is below, it means you are looking for an opportunity to buy. When the dot is above, it means you are looking for an opportunity to sell. Kate is asking, is there a specific point to fix in the moving average? I think that question is not so clear. Maybe you should just rephrase it. That question is not so clear, Kate. Maybe you should just rephrase the question so that I can understand what you're trying to say. All right, so I've shown you the moving average. I've shown you the parabolic SAR. The next one is the ADX, the average directional movement index, ADX. So still on that trend, I'll scroll to average directional movement index, which is shortened as the ADX. I'll click on it and you can see here parameters, period 14. This one, you don't need to change anything, just leave the setting the way it is. Except if the colors, if the white background is not allowing the color to be obvious, that's the only thing we'll adjust. But every other setting should be left at the default setting. So I'll click on OK. Okay, some of us may not see this too clearly, so I'll need to adjust the background color. Okay, let me see if I can do a black background for this. That might work better. All right, so come ADX, and you can see this is the ADX. You can see, and for this ADX, like I said in the earlier, we need to add a 25 line. So we right click on it, and the levels, under levels, we type 25. Why do we need the 25 line? The 25 line is what indicates whether the market is going to be buying or selling. Manfred Okon, please can we get the recording of this session? Yes, it's being recorded. You will get the link, and the link is going to take you to our YouTube channel. We encourage you to subscribe to that channel. A lot of content is coming up, which are very educative and will help you to learn Forex trading, faster. So you can see the ADX right here. The main line that we're looking at is this one that looks a little bit like a green color right here. Okay, this particular one. So for the ADX, when the ADX crosses above the 25 line, now this is the 25 region. When the ADX crosses above the 25, it means the market is volatile enough. Now, this one it just shows us more of the volatility of the market, not necessarily the direction. Because there are times it will be above 25 and the market will sell. There are times it will be above 25 and the market will buy. So it only shows us volatility. So you need to use other indicators to determine whether you're going to be buying or you're going to be selling. I hope you get it. So it's not going to tell you direction per se, but to tell you there's sufficient volatility in the market. So you can see in this instance here, ADX is above 25 and the market is selling. ADX above 25 and the market is buying. So it won't show you direction. It just shows you that there is sufficient volatility in the market for you to buy or sell. So other indicators are now the ones that will tell you whether it's a buy or a sell. All right, so I've shown you three trend indicators. I've shown you the moving average. I've shown you the parabolic SAR, and I've shown you the ADX. Now we'll move to the oscillators. And the first oscillator I'm going to show you is the stochastic oscillator. I think I just retained this black background. Stochastic oscillator. If you click stochastic, okay, I think I was a bit fast there. So let's start again. I'll click on the indicator menu. I'll come to oscillators and I'll scroll down to stochastic oscillator. Stochastic oscillator. When I click stochastic, this will appear in the menu. And you can see the levels 80 and 20. These are default settings. Just leave it the way it is. Then I'll click on OK, and you have the stochastic, installed on the chart. Now, how this indicator works is this. When the stochastics, you can see the reference point is the 80 and the 20. The 80 is considered to be overbought zone, while the 20 is considered to be oversold zone. Now, when price gets to overbought zone, it means the price has bought so high that it will no longer buy, but rather will reverse from buying to selling. And the oversold zone means that price has sold so low that instead of selling lower, it will reverse from selling to buying. So at 80, at stochastics 80 and above 80, we're looking for an opportunity to sell because the market will drop when price gets to that level. You can see here a decline in price at 80. When the stochastic gets to 80 and above, price is expected to decline into a sell. Same thing is seen here. This is 80 and above, and you can see a decline in price. Now, on the other hand, when the stochastics is at 20 and below 20, price is expected to reverse, from selling to buying. Again, when the stochastics is at 20 or very close to 20 and below, the price is expected to reverse from selling to buying. So you can see that you can use this to actually generate trading signals. Stochastics 80 means we're looking for opportunity to sell. Stochastics 20 means we're looking for opportunity to buy. And the second oscillator I'll show us is the RSI, the Relative Strength Index. Relative Strength Index. All right, so this is the Relative Strength Index. It with the default setting for levels is actually 30 and 70, but you can also, it's advisable you add 50. So I'll click on add and I'll type 50 there, and it's a very flexible indicator. You can add the 50 without any stress. So that's the only thing we need to do. Then I'll click OK. And you can see the RSI, the Relative Strength Index. Now, this works a little closely to the same way the stochastics work, though we use it a bit differently. Now, for the RSI, the levels we're looking at is the 70, 30, and 50. For the RSI, the 70 is the overbought zone. The 30 is the oversold zone. The 50 is the midpoint. I'll say that again. For the RSI, the 70 is the overbought zone, meaning when price gets to 70 and above 70, we expect the price to reverse from buying to selling. The 30 is the oversold zone, meaning when price gets to 30 and below, we don't expect the price to sell anymore. We expect it to reverse from selling to buying. The 50 is the midpoint, meaning when price crosses, when the RSI rather crosses from below 50 to above 50, it indicates a buy signal. And when it crosses from above 50 to below 50, it indicates a sell signal. So let's go right into all of this. So here we can see that the RSI crossed above 70s. This is the 70 and above region, and that is this zone up here. I can see, sorry, that's not what I wanted to show us. There are times when it's here. Sorry, this is what I wanted to show. And you can see the RSI, trended downwards after that, and price declined into a sell. So when the RSI gets to 70 and above, we don't expect the market to buy anymore. We expect a reversal, into the sell or into bearish direction. Here we have this whole region is actually above 70, but the decline finally happened around here. So it was a minimal decline. Such happens sometimes. It didn't sell so much, but that's what we have, for that area. So let's look at the third example of the overbought and the reversal expected. All right, so we have the third one here. You can see this is 70 and above, and finally can see the decline right here when the market, reversed. So when it gets to 70 and above, we're looking for opportunity to sell with the RSI. Now, when the RSI is at 30 and below, like I said, we expect a reversal from selling to buying. You can see here, the RSI moved up and price went massively bullish. Again, this is at 30 and below, and we can see a bullish movement. Again, right here, 30 and below, and we can see a reversal into the bullish direction. All right, the last one is when the RSI crosses, the 50 region. We said that the 50 is the midpoint. When it crosses from below 50 to above 50, it indicates a buy. When it crosses from above 50 to below 50, it indicates a sell. Again, when the RSI crosses, let me look at the clearer one here. When it crosses from below 50 to above 50, it indicates a buy. Again, let's look at this one here. When it crosses from above 50 to below 50, it indicates a sell. All right, so that's how the RSI is used. And on the oscillator, the last one we look at now is the MACD, the moving average convergence and divergence. I'll click the indicator menu again, oscillators, and scroll down to MACD, MACD, which stands for the moving average convergence and divergence. So when you click on it, this is what the menu looks like. You have the colors, the silver, the red, and you're not changing any setting, except you just want to make it bold. But all these parameters should be left the same way we have it right here. Personally, I like, okay, the 0 is there, so let's just go on. So I'll just click OK. And this is the MACD right on your screen. So we said the periods are the 12, 26, and the line, the signal line for this one is a 9. So now, how this MACD works is this. When the MACD crosses from above to below, it indicates a sell signal. You can see here, there was a sell. When it crosses from above to below the line, the red line, you can see it generates a sell signal. Again, if you come to this other side here, we say when it crosses from below to above, when I say below to above, you can see that here, the rectangle, the box is facing downwards. So this is the below, it's facing downwards here. So when it crosses from below, when the line, you can see the red line is crossing from the below of the MACD to above it by signal. Again, here it crossed from above to below. That's a sell. This one is a small buy. Let's ignore that. Let's look for another one again. Again, there's a cross from above to below. And we can see there's a massive bearish pressure there. Again, there's a cross from below to above here, and there's a massive bullish pressure. All right, so that's going to be all, that will show us tonight on indicators. Any question? You can type your question in the comment section, and I will attend to you. Any question? So tonight we've looked at different types of indicators, the trend indicators, the momentum indicators. We've looked at the moving average, the average directional index, the parabolic SAR. We've looked at the MACD. We've looked at the relative strength index. We've looked at the and many other ones, like that. So these are tools you'll be using, in trading the Forex market. This is part of the intermediate class. So at this point, again, like I said, if you have a question on these things we've done so far, you can ask them. The recording we made available, you're going to get them, in your WhatsApp groups and through, or you can ask your account manager so that you can watch the video over and over again. And don't forget that this bootcamp continues. It's a 6-week event. Today is Sunday. We're going to have another session on Wednesday and Friday this week, same time. So make sure you join us. So I'm still waiting. Any question on all this? And don't forget tonight, we're looking at this topic. We've done more of the desktop version. In the next class, we'll look at the mobile version. So how do you get this installed on your phone? Either you're using Android or you're using an iPhone. That will be addressed in the next class. So if you have a laptop, this class is for you. And if you have both a laptop and a phone, I mean, that's a good one. That means you've joined this class to know how to use these indicators on your desktop. Then in the next class, we'll look at how to use those indicators on your laptop. Okay, it seems we are all good because I'm not getting any question. Okay, Collins Okubo, which is your best indicators combination in taking position in the FX market? Okay, I think you are directing this personally to me. I do a lot of advanced strategies, which we'll still get to. But if I will combine indicators, I will look at, there's none of them that is not good. It's understanding the usage that is most important. But then on this, if you want to make use of this, I will advise you can make use of your moving average, your stochastics, your RSI, and MACD. A combination of those four will give you a very simple, straightforward strategy that can help you in trading the Forex market. For example, you can look at an overbought zone, on the stochastics, and you expect price to decline from there. Combine that information with a moving average that is trending downwards. Combine that with an RSI that is below 50, and possibly a MACD that is below 0, and you have a powerful, simple strategy. But that is not really a strategy class. I don't want to go deep into that, but just a combination. If you watch this video and you understand each of these, indicators, then you can combine them together. At least you combine minimum of 3 indicators together. It will give you a solid, strategy to use in trading the Forex market. Yes, stochastics, MA, exactly, yes. It's just a simple one. You can also combine your you can combine your ADX, with your moving average and parabolic SAR. That can also give you something very sweet. You can try this on your system, on your desktop, or your phone. And to be honest, all these indicators you said, they can even be used on the phone, because there are some people that are watching tonight. Maybe you don't have a laptop and you feel you cannot trade Forex until you have a laptop. No, that's not true. With indicators on your phone, you can trade. If you don't have a laptop, it's not a must. If what you have is it's a phone, these indicators, and that's why you should not miss the next class. I've shown you how these indicators work today, because in the next class, you'll be shown how to install them on your mobile device. You can as well use your phone with these indicators and still come out with very, very, very powerful trading signal, generating your own signal by yourself and making money in the Forex market. So I think I responded to Collins. Any other person? Okay, I think I should just take this a step further so that we'll not just be talking vague. Let's do something right here. What about the candlestick? We are not yet there. So relax. Manfred Okun, we're not yet there. We will soon get there. We're not yet at candlestick. This is intermediate class, in about 1 or 2 classes from now, we start doing deeper things. We just started last Sunday. We looked at the introduction to Forex trading. We looked at the MetaTrader on Wednesday. We looked at MetaTrader mobile, MetaTrader desktop on Thursday, MetaTrader mobile on Friday. Now, today we're looking at, technical indicators. So we take it one step at a time. This is a boot camp, it's a school. So we go from beginners to intermediate, then we'll go to advanced. So just sit down and be ready to develop. This information we're giving you will not get it anywhere else. It's only PU Prime that does this. So I want to believe you are here tonight. You have a live account with PU Prime because we're giving you values that you're not getting elsewhere. So just stay with us and you get all you need, to trade the Forex market. So like I said, I'll just leave us tonight with a simple strategy you can use to trade the market. I feel I should just do that as a bonus to this class tonight. So you can just have like I said, you can add your ADX, your moving average, and parabolic SAR, and that can just a combination of those three. You need about at least minimum of 3 indicators to match together, to give you indication whether you want to buy or sell. So let's start by attaching let's do the moving average. The moving average is under trend. The 200 moving average, okay. You can attach I said the parabolic SAR. Okay, I think I'll change the color of the SAR now to green or lime since we have a black interface. Okay, I think it's okay. And you can add the ADX, average directional movement index. Like I said, the ADX is just to let you know the volatility. So this is just a very simple one. Now, we said for the moving average, when price is below the moving average, it indicates we have a selling pressure. And when price is above the moving average, it means we have a buying pressure. For the parabolic SAR, when we said that when the dot is below price, it indicates a buying pressure. And when the dot is below the price, it indicates a selling pressure. So you can see here that price is clearly above the moving average. Moving average is a red line. And you can see that price is clearly above it. So we're already in a buying zone. And the parabolic SAR, the dot is below, which also indicates, a buy zone. And the ADX has crossed above the 25 line, which is equally another buy zone. So just put your vertical line there. What can you see? This generated oh, okay, this is 4 hours, it's a swing setup, all right. This is 326 pips. I mean, from the entry right there to the most recent high, 326 pips. 326 pips on 0.1 lot is $326. $326 with the current exchange rate. 326 times our exchange rate now, I think maybe 570, 1,570 or 1,580. Let's do 1,570. That's about $500,000 naira just using this simple strategy. You can see this is very powerful. The lady that was asking at that time said, I can't get this. This is very simple and straightforward. I told you we'll get to the practical session. Let me search out her name. And that's Kate. Kate, you can see that your time here tonight is not wasted. I just give you a very simple thing you can get started with tomorrow and start making money in the forex market all by yourself. You don't need to get anybody. Sometimes people say, oh, where are signals? Where are signals? You can generate it by yourself. And that's what we just show you right now. Very simple and straightforward. Just combining indicators together, you can get a powerful strategy to trade. All it requires is that you know the function of each indicator and you're able to match them together to give you a trading strategy. For the moving average, when price is above moving average, it indicates a buy. When price is below moving average, it indicates a sell. So that is the rule around the moving average. For the parabolic SAR, when the dot is below price, it indicates a buy. When the dot is above the price, it indicates a sell. So you just look at where all these things align. For the ADX, when the ADX is above 25, it means the market is volatile enough. This one is just telling you the volatility is strong. It won't tell you direction. It tells you the market is volatile enough for you to take a trade. And I just combined it right now. I can see the powerful signal. Though this is actually swing, it's a 4-hour signal. If you do it on 1 hour, it will still work, but you won't get this number of pips. This swing setup can give more pips, but it requires more patience, compared to day trading. If it's day trading, you can still get maybe 50 to 100 pips thereabouts. So this is just a very simple one you can get started with. Okay, I have quite some questions here. Vivian, my question is outside of this class. Okay. Okay, you're asking that you have a busy schedule. We have physical classes on Saturdays. Physical classes. We had one yesterday, but these physical classes are restricted to Lagos and Abuja because those are the two places where we have our physical offices. So if you live around Abuja and its environment, you can go to our office at P Prime Africa Walk and Connect Building 50, a B2 Ukiwe Street, Jabi, Abuja. Or you can reach out to your account manager. They will guide you with the address and make sure you are there this Saturday for this same boot camp. See, just like we're having this boot camp online session, Saturday is the physical session for people who have busy work schedules, who can't come to our physical office training during the week, and who will find it difficult to join the online classes during the week. Then they can join the physical training on Saturdays. So that will be available this bootcamp period for the next 6 weeks. Okay, we started last weekend. So the remaining 5 weeks, we're going to have physical classes on Saturdays on these locations that I mentioned. Sorry, I've only mentioned Abuja. So if you live around Lagos and its environment, you can come to our office at 54B. That's Agos Executive Lounge at 54B at Denny Jones Avenue, Ikeja, Lagos. That's where our office is in Lagos. So join us this coming Saturday, for a physical training session for, professionals who don't have time during the course of the week. The time for both Lagos and Abuja for physical classes on Saturday is 11 a.m. Okay, you're saying after the boot camp, you mean after this 6-week period, the recording is always available. So you can always watch the recording. If you miss any of the classes, you have the recording available. Like the class we had last weekend now, we uploaded the videos and we dropped the links to those classes. You can reach out to your account manager. They will make the video of the recording, of those classes available to you so that you can watch. All right. Any other question as we round up? And don't forget that PU Prime will run analysis session twice a day. 7 a.m. and 12:30 p.m. So 7 a.m. tomorrow, make sure you are available, for our morning analysis. And what makes the morning analysis on Monday unique is that we'll give you the outlook of what will happen in the forex market for the whole of the week. Whether the market is going to be buying or it's going to be selling. I will tell you specific currency pairs to look out for that will be buying and selling. Not only that, we also give signals when they're available in those analysis sessions. Like I said, it's twice a day, 7 a.m. in the morning and 12:30 p.m. in the afternoon. And we'll do that Monday to Friday, every single day of the week. So make sure you join us for this session. And the first Friday in the month of September, is the NFP. That is our live trading session. Live trading session. Make sure you don't miss this. See, if there's just one broker around, and that's PU Prime. You can't miss all this value that we're giving you. However, the live trading session is for funded clients. So if you want to join the live trading session, the next one, which will come up on the first Friday in the month of September, that is September 6th, just about 2 weeks away from now. Make sure you have a funded account. You have registered, you verified the account. Your account, is verified, and you have funds in your account. Then you can join us for that session to trade together live and make money from the market. Thank you, Macaulay. Where do we join? You will get the link. Don't worry. You will get the link. That's to a BT Miz buy. All right, I think we're done for tonight. So I want to appreciate everyone for joining this class. It's a Sunday, we quite understand. So join us tomorrow morning, like I said again, for the morning analysis session by 7 a.m. in the morning. All right, take care and have a wonderful night rest. Bye-bye.